We're speaking today with Ben Laine, U.S. analyst for Rabo Research Food and Agribusiness Division of Rabobank. Ben is part of the team that just issued the dairy report for the second quarter of 2020. We're going to ask Ben to share some of the key points and perhaps take a look ahead at the rest of the year. Ben, welcome back to DairyBusiness.com.
Thank you.
Let's begin by talking about the first item that was in the summary report that you issued, in which you talk about the milk production and what your team sees as milk production forecasting for the U.S. and perhaps some of the other major producer areas as well.
Yeah, so we're looking across the world, pretty much across a lot of the major milk producing regions, to expect to see continued increases in milk production for the rest of this year and continuing into the beginning of next year. Nothing phenomenal. It's not going to be huge gains in milk production, but we're broadly not expecting a major slowdown in terms of milk production from the major milk producing regions. We were a little bit surprised to the downside of how much of a pullback there was in the most recent US milk production report that came out in between when this is published and now. So that was a little bit of a surprise to the downside, just how much we had seen some of US production pullback. But I think given some of the price strength now here in the US and some of the recovery in the rest of the world, we do still expect that in Q3 and Q4 we should see some positive growth in milk production.
What sort of percentages are you thinking about as we move through the rest of this year and early next year?
We're looking at below 1% growth, and that's the usual that we think of for the US is about 1.5% year over year. So for Q3 and Q4, we're looking at, I think it's around 0.9% for the second half is what we're looking on year over year for US.
Sure. You mentioned also the report highlights that, and we're all happy to say, we've seen a rebound in milk and dairy product prices, both for the consumer, but more importantly for dairy farmers. But you mentioned your report says it may be too soon to celebrate that this is an ongoing price level. What are you looking at for price levels to the farmer?
They're going to be much better than we had been looking at when it was kind of the worst of the crisis. So there's been a lot of a rebound since the real collapse following the lockdowns, legitimate that we're seeing right now. But as we look forward, we're looking at continued slower demand as we level out and try and get back towards normal. And again, that continued increase in production. So I think we'll see some of the price levels coming down from where they are in June, July, but it's not going to be nearly as bad as we've been looking at in April and May and what we've been expecting then. So I think we're still looking okay, even though we might come down from kind of this recent rally that we're in at the moment.
Ben, I'm going to interrupt here. I experienced some interruption there, being shown that
you broke up a little bit towards
internet connection wasn't great. If you don't mind, if we could do that question over again.
Sure. Yeah.
We'll start right here. Ben, another point that your team made in terms of dairy prices is we've seen the rebound, but you expressed maybe a bit of caution that this very high level of prices that we're seeing currently may not be what's going to be operative the rest of the year. How are you looking at at dairy prices, particularly farm milk prices?
Yeah, no, I think that right now it's definitely a welcome development that we're seeing prices skyrocket for June and July. Probably is what it's looking at right now. I don't know how sustainable that will be as we go forward. I think that once we get through this kind of initial excitement and this strong rebound driven by a handful of factors, a lot of that's not necessarily sustainable through the rest of the year. So we're certainly looking better than we had been expecting at kind of the worst of the crisis when all the lockdowns were really in place and there was a lot of uncertainty about how long things were going to last. We're much better than we had been expecting then, but we're probably going to come down somewhat from where we are right now, just because of the fact that we're going to continue to see milk production growth and that demand is looking healthier, much healthier than we had been thinking it might. but it's going to take some time till it really gets back to normal levels.
Speaking of that demand, you acknowledge, of course, as we all know, when the lockdown hit, the drop off in food service, a boost in retail. You talk about those two channels converging as we go forward. But what's the timeline? What's your thinking about when the two supply lines will kind of become back in balance, if you will?
Well, it's hard to know if they'll ever really come back fully to where they were. To some degree, I think we could see some change that lasts and lasts for much longer than it might have otherwise. Consumers' behaviors might have changed. We've been in this situation long enough where we're going to see some habits really be different going forward. Consumers might be getting more used to doing some shopping at retail and preparing their own food. And if people are working from home and not traveling as much, they're going to have different patterns for a sustained period. So I think we could expect to see some strength at retail that lasts for some time here. It's not going to be as strong as we had seen initially when people were really stocking up, but I think it could be much stronger than it had been in the past. People are going back to basics. They're finding new ways to prepare foods and new habits that involve dairy and buying milk and buying cheese and butter and things like that. So I think that strong retail could continue. It's going to take time for food service really to come back fully, but some of the sectors that are most important to dairy, some of the limited service, fast food, things like that, are showing much better strength and much better rebounds than some other sectors that are good, but not as critical to dairy consumption. So even if we don't get fully back to where we had been before, exactly that same balance, I think there's a positive case to be made for returning back at least to the same levels, if not beginning to move back towards even higher levels of consumption, if not the same levels we had been by the end of this year and into next year.
And your report also acknowledges that the general economic conditions as we move through and move out of the COVID situation, but are we going to be faced a depressed market, higher unemployment, and some economic challenges may have a bearing on the marketplace too?
Yeah, I think that's the part that at the moment, because of all the excitement about the lockdowns being lifted and the price strength that we're seeing in the commodities right now, there's a lot of excitement, but we can't forget that we're going to be coming out of this into a recession, and not all recessions are going to look the same. It's hard to know exactly what form this is going to take, but there's at least initially been pretty high levels of unemployment and some improvement pretty quickly too, but unemployment has a big impact on domestic dairy demand, so that's going to be an important factor. And it's hard to tell exactly how consumers are going to fare as we move through this. The other factor is a lot of just uncertainty about what kind of government aid is going to be available to the sector, and just to keep the economy moving. So I think this being an election year, there could be more aid available, more stimulus, and just trying to keep the economy moving and keep us a little bit insulated from some of the pressures going forward. But that economic uncertainty, the challenges, the unemployment, that's still going to be a headwind against returning fully back to some of those demand levels we had been at.
Sure. Well, Rabobank is a global entity, and your report covers in detail dairy markets around the world. But let's just look for a moment here as we finish up at what you foresee for the U.S. export opportunities.
Yeah, I think U.S. exports it's going to be a challenge. Other countries around the world, including our normal export destinations, some of the big importers are facing their own challenges due to COVID and other factors. But China, for one example, is down. We're expecting their demand to be down 15% year over year for the full year 2020. Their import needs, and other areas, a lot of our export destinations are suffering from pretty weak currencies against the dollar, which makes it more challenging to get U.S. product there. So there's going to be some challenges there. What that really comes down to is that we're not going to be able to export our way out of some of the inventories that we're building right now from the period that we had slower demand. Exports will eventually resume, but it's going to be a challenge, and there's going to be some price competition from other areas of the world. So we might see lower price levels needed to clear some of those exports.
Well, Ben, thank you for these insights, and tell us where we can find the report. Some of the folks listening might want to see the full report. It's really quite fascinating. Where can they find that report?
Yeah, you can look for it on the Rabobank website and look for Rabo Research and Food and Agribusiness Research.
Well, that's great. Thank you. We want to thank Ben Laine of Rabobank for being with us today. This is your host, Joel Hastings for DairyBusiness.com.